Mortgage rates pushing into the 8% range have many people super anxious about buying a home. And according to a recent study, consumers say they won't feel comfortable until rates reach that mid 5% range. Experts say that magic number is possible even now with the right strategies. That's why you have to have a really good real estate expert. So our real estate expert joins us now. Lane Lyon is a managing broker with Coldwell Banker. Thanks for calling in.
Hey, thanks for having me up on the big desk today.
I know.
This is exciting.
We're changing things up.
I like
it's nice
it.
to have you up here. All right, so talk about this magic number. Why 5%?
Well, it all has to do with what feels normal for consumers. And John Burns Research and Consulting recently asked homeowners and renters and found that 66% said, you know, historically normal feels like it should be 5.5% or lower. And in fact, Corey, for 12 straight years, we had mortgage rates 5% or under. So that's a driving factor as well.
Interesting. All right. So you know that I've been in the market to buy a home for a while now, and I learned about this 2-1 buy down. The 8% scares people. They're like, I'm just not going to even go there. But there are ways to bring it down. So talk about 2-1 buy down.
Absolutely. That's really the big topic we have. If you want to be in the 5% range, if you're financing, you can be in the 2-1 buy down. Really helps. First of all, buyers can bring money to buy discount points and bring that rate down, and then ask the seller for the 2-1 mortgage rate buy down on top of that. Now, here's how this works. First of all, it's temporary buy down, which brings down the interest rate a full 2% off the current rate for the first year, then 1% off the current rate in the second year, and then it goes back to the current rate in year 3. But ideally, you can refinance somewhere in there. So it just buys you some time in that first year. You're really going to save. Here's a breakdown that I brought for you also where it really helps. On a $480,000 loan at 7.5%, you're looking at principal and interest of about $33.56, Corey. To look at year 1, you bring the 2% off that 7.5, you're at 5.5%. Your payment becomes $27.25. That's going to save you about $600 a month. So that's significant. Year 2, it goes up to 6.5%, but we're just over $3,000 a month. You're still saving $300 a month. And then it goes back to the current rate. Lou Tornambi from Guaranteed Rate Affinity helped do the math for us, Corey, on that. It can make a difference, especially if you're looking now.
Yeah, and again, the hope is within those couple of years, the rates come down, you refinance or whatever, but nothing is free. So talk about how you get to the 2-1 buy down.
Well, sure, sellers have to pay for the 2-1 buy down. And the example I just showed, it would be about $11,000, which sounds like a lot, but if you're a seller lowering price $20,000, $25,000, many would rather do that.
Yeah, absolutely. Lastly, let's talk about assuming other loans like an FHA or a VA loan.
Right. These are government insured loans, and we're starting to see assumable loans back out there because people got in that 2% range, low 3% range. And so there's a lot of questions that go around it, but we're starting to see in MLS listings, this is an assumable loan. You'll have to come up with actually 2 loans to make up for the part that the seller will be taking with them. But it's definitely you should be asking about, particularly if there's an FHA or VA loan already on the property, you may be able to take a portion of that and save yourself some money.
See, there are ways. So you know, sellers, you can get on the market. Buyers, there is a way to make it happen. Lane, as always.
You don't need to wait necessarily. You can get that rate now.
Time is now. All right, Lane, thank you.